understanding of what I've been talking about, guys. This is the fake out breakout. This is going to be the strategy that I use pretty much only from here on out. It's on the 4-hour. It's a swing trading type of setup. So whether you like swing trading or not, that's, up to you. But here it is on NASDAQ. You have to understand that there has to be some fundamental bias as well. Okay, we know that the stock market in the United States and just the overall global economy is going through a very difficult time. So even on pushes up, we should still have an understanding that more than likely we're looking at a bearish market for the remainder of the year. That means if we're taking shorts in a bearish market, there's a higher potential of winning. In bullish markets, we have a higher potential of winning on buys. Very basic. Here's the fake out breakout, right? So obviously I got some blue lines from before, just channel stuff on the daily. I'm on the 4-hour, as you can see, right? The SMAs I have in here don't really matter. They don't come into play. I keep them on there because it kind of gives me some sort of overall flow or momentum of the market. So this is NASDAQ. This was the one I set for you guys. I'm going to show you a couple, so please stick with me during this video. It's going to be probably 10, 20 minutes long, but it's a highly accurate setup that will make you money, and especially when it happens on the NASDAQ. I mean, if you're swinging index funds for this far, I mean, let's pull the ruler out here, guys. If this whole move hits, say we take it at the weekly trend right here, right? That's 1,385 points, which if you were to break those down in pips, that's 13,850 pips. That is insane. There's a ton. You can buy a yacht with that kind of money if you leverage way more than you should, right? But you can seriously change your life. So if you can remain patient and understand that taking partials is really important to do. You can also break it down on lower time frames once you've caught the trend to get more positions. So you can turn one trade into 10 if you just collect positions along the way down. And I'll show you how to do that too. Okay, so here's the fake out breakout method. Right, so we have what looks like a bull run. Boom, it's going back up, right? Of course, I have some interesting key prices before of where there's a bullish order block that came down after that. So I know that when price hits this level, man, last time it's done that, right? We have a drop here. Now we can extend this even further, guys. There's our first confirmation of the whole thing. Before we even start looking into anything else, we say, 2 times in the past year, okay? We're not even going back that far. In the last basically 6, 7, 8 months. When it's hit this level, it's dropped. Really important. Higher time frames are really important. You guys got to get off these lower time frames. They're not as profitable. So what we have is really straightforward. Okay, I'm going to do this as easily as I can. Memorize this. Save the video. Share it with your friends. It's free. I should be charging lots of money for this. People charge thousands and thousands and thousands of dollars for courses, and they don't give you something like this. So we draw our cute little trend line, right? Because trends are important, right? It breaks the trend. Some people are selling right here and just catching the break in trend. Good for them. I like to catch the retest and react to that, okay? I'm not trying to get in and make decisions ahead of time. I want to react to what happens. So this is purely a reactionary style of trading. It's kind of like a break and retest, but a little different. I call it the fake out breakout. It utilizes a few different things, but basically what I've learned is it ends up being the opposite of what a lot of retail does. When I post this strategy on Reddit, people tell me I'm a fool, and then I get crickets, a week or two later when they see that it's made the full move. Now, will it always make these huge drops? No. So here's what we do, okay? Oops. So, Sunday, March the 12th. Okay, so we have our trend. Okay, our trend is broken. The market is potentially shifting in another direction. What we're looking for is this right here, which is the run-up. This is a loss lead. This is your retail trap. Now, if you buy off of this order block, right, because the market likes to come down below where most people have their stops at, right, stop them out, get back in. So on the 4-hour, that's not a whole lot, but if you look on the minute or the 5-minute, that's a decent amount right there, right? So, market structure is broken, okay? People are thinking it's a pullback of the move, and it's going to keep going up. Sometimes it does, so this is what we do. We're looking on the higher time frames. What we want to see something very similar to this. So we know we have a higher low here. You could sell right here, and it's not as high probability of a setup, but you certainly could do it. Sell up here, TP down here. But we have our break in structure, okay? And then we have our retest. Our retest starts to create a higher high. Okay, I sent this setup while we were still on this candle, right? This is a closing candle on Friday, right? We're closing, the market's closing right in here. And I'm saying, hey guys, let's see how it reacts into our quote-unquote golden zone, the Fibonacci. So what we do is we take our fib from the very top to the very bottom, okay? The 1 and the 0, okay? What we're looking for is price to push up and reject above. Sometimes it'll push up to the 79, reject that, and wick all the way back down. What we want to see is these positions right here, okay, be taken out. We have a massive liquidity grab on higher time frames right here. That's all this is. This is coming up to liquidate all the trades that were taken in here, okay, and then potentially positions that are still here that people are holding that haven't taken their full profits or whatever in the trade. Also, when the market drops like that, this is pretty fast, man. Like, look, that's only we're talking about 2 weeks and it's there. What this does is this is giving the institutions the potential to get in at a better price. I'm not going to get in up here if they miss that, but they can get in here. So price gets run up, okay? Massive buys get in to push up, okay? These buys are often funded by those same hedge funds that are selling here, right? It's a loss lead. They push the market up, it comes up, and it rejects with a wick. Fantastic. We love wick rejections, right? That means price pushed up and failed right here. It failed to do something right here and came back down, right? So, the 618 is important. This is our golden zone. Sometimes it can happen in here. Sometimes it can happen in the 5-1 or the 5. But generally speaking, with the NASDAQ at least, you're looking at the 0.618. Okay, so these are the settings, right? 1, 0.79, 0.618, 0.5, 0.382, 0. Classic Fibonacci sequence. Nice and easy algorithmic math given to us. So, like I said to some people that were asking me, well, what do you think it's going to come off this price? I said, nope, we're probably looking in the 12.437 range, which is what I said. That's the exact position that I basically got in at the top. So, price pushes up, liquidates all potential positions here, right? Grabs the buy side liquidity, BSL, it's called if you know your smart money concepts, right? Grabs the buy side liquidity, liquidates that, and the sell is on. So boom, comes up, liquidates that. Major institutions are taking options contracts, shorts on, the foreign exchange, whatever they can. They're taking all those positions up here, and boom, that candle, literally like 75% of it, 60% of it, 66%, 2/3 of it is gone. Down it goes. So that's our key, okay? So we know structure broke, came down. We have the big push up, breaks the previous highs, liquidates here, okay? The fib is up. An additional confirmation is the 4-hour closes below, okay? Below the 0.618, and we're in for a sell position. All right. We take our sell. Now here's a key factor, and you're going to see it here, okay? I always say make sure you take partial profits. Where should we take partial profits, though? We don't know. That's why I have the 0.382 in, because sometimes it comes down to here, and it's going to go bullish, because in fact, it's not, it's actually a bullish move. Like, you can never truly expect or plan for anything to happen, because everything in these markets can change within the blink of an eye. Okay, so the 0.382, that's your first quote-unquote take profit. What you should do here is take 80% of the total trade, okay? So, say you're trading with a standard one lot, you should take 0.8 of partial profits here and let the remaining 20% go. Why do I say that? It's a psychology hack, okay? You've already won the trade. You're not overthinking what's happening next. And oftentimes, when you hold that additional 20% of the move, you end up making just as much as you did on the 80% partial here. If not, sometimes even more, okay? So, we're in the situation now, 80%, okay? Let's just look at it clearly, 80% right there, okay? So you have 20% left still, okay? Plus another 20% here, okay? Plus another 20% here, right? So you're able to keep making money that way. And one of the things to do, obviously, is, let's do it now because it's probably smart, but we'll put our stop loss at break even, or sometimes you can risk some more of your profits if you want to. Sometimes it's going to come up and stop you out too. It's going to come back up to this initial position, give them an additional opportunity to get in, and they're going to make some dough off that. But generally speaking, you want to protect the trade. Okay, that's the basics of it, guys. And here's how we target. So 382, obviously this is equal lows, right? So what's going to happen here? It's clearly happening right now, okay? People see this, they're like, oh, equal lows. Oh, it came back down to grab a little bit of sell side liquidity below, okay? Now we have a huge wick because a ton of people are buying right here thinking it's going to run up. And it did. That's a good little move on NASDAQ right there on the 4 hour. That can make you a really good amount of money. So what we'll see is some sort of retracement, more than likely a rejection, and the continuation of this move, because it seems as though a new trend has started, okay? So, how do we target where we're going to go? Let's see. Pretty simple. So obviously down here, I've got a key level marked up, right? This is where it bottomed out previously when we're all thinking, oh my lord, the stock market is over. Well, it still might be, okay? So we have that, but we understand that there are order blocks. Every one of these pullbacks here, there's often an order block connected to it, right? You break it down on smaller time frames, you can really see it. Right in here. Like, boom, boom, market's going down. Just kidding. For pattern traders, oh, there's the weekly, there's our weekly bottom. Okay, cool, buy up off that. But look at that. That's a, boom, huge. Look at how much bigger that candle is than this one on the 4 hour. That's crazy. It's an order block, right? Price is always going to return to those order blocks. It might not happen for a year. It might happen in 2 days, but it almost always does return to those positions. Okay. So that's really it right there, is you're looking for the break in structure, okay, the retest, we pull our fib up, top to bottom, we wait for wick rejections to close in the golden zone, and we take our short positions. There you go. And then, if you want to get really fancy with it, oftentimes to get additional positions, and obviously you're going to take these on smaller time frames to get your entries, but you can see how this works. Look, all I did was move the fib over, guys. What do we have? Okay? Almost the exact same thing here, but a miniature version of it, right? Okay? Breaks down below, right? Creates what we would think is a quote-unquote higher low than this, but we already know a higher high was created. Okay, well, it's going to be bullish, right? Nope, Guess not. Price comes back up, gives everyone an additional opportunity for an entry, and look at the rejection on that thing, man. Look at that rejection. You tell me you're not going to sell after a wick like that with everything included, and then boom, huge candle straight down. Okay? Now, let's see what happens. Oh, shit. Let's see what happens here as well. Up here. Right. Price came up, tried to break the fib on the 382, failed. Back down it goes. Okay, what's going to happen next? Price broke again. We have not quite equal lows. This is a lower low than that, right? Huge wick, so a buy came in. So what are we looking for next week on Monday? Okay, it's March 12th. Something to happen in here. Look for something to happen in here if you're not in a position yet, and then it's coming back down. Okay, so that's the basis of the fake out breakout. Okay, you have to have an understanding that we're in a bearish market. Okay, there's a flip in potential trend right here. Market structure is broken. We have the run up for the retest and loss lead. We have the confirmation of it wicking and rejecting into our golden zone. It also clears the buy side liquidity up above and drops. Fantastic move. 80% partials right here. See that wick right there? How many partials do you think got taken right there? How many people do you think profited right there? Why? Well, you know, potentially because it's going to have fine quote-unquote support there. Great. Well, it did. But either way, you can take that down and just boom. There you go. There's your like one-to-one trade pretty much right there off the bat. So that's what it looks like on NASDAQ, okay? Bear with me here, guys. Seriously, like, put in the effort to watch this video. Like, I know it's a little longer, but it's going to help you. Freaking promise you that much. Now, if we go back to, that's me. Where am I? Here we go. So that's NASDAQ. Let's look at another one it works really good with is Odd USD. This is another setup that I sent to all of you guys like literally almost a month ago now. It passed multiple phases on multiple challenges. Ask Hayden. He did the same thing. All right, here we are. We're on the 4-hour Odd USD. That looks eerily similar, does it not? Equal highs on the tops there, key point levels. What happened last time it hit this price? Almost the same time, right? For NASDAQ, it was like July of 22. Odd USD, Australian dollar, US dollar, it's August of 22, right? Gets back up to that price, and then it starts to come down. It's going to come down and clear out all these order blocks. All right. So, same frigging setup. Different pair. Wow, it works on more than just one pair, doesn't it? Yes. This works on mostly all the pairs, especially the ones that are attached and are benefiting off of the United States dollar. For some reason, the U.S. market likes to use this a lot. So don't share it too much because God forbid they figure it out. So, what do we have? Understand that there was news all throughout here too, right? Just like NASDAQ last week had all that news that, you know, just magically pushed the market in the direction we were looking for. They used that news as the excuse to run it down. People are all bought out. So, here's our trend line. We have a break in structure. Yes, class, that's right, a break in structure, okay? Could have gotten in here when it hit the 5, right? And caught a nice little trade. But it had more to go. It came back up, right? So if you're in this trade and you're holding it, this is like a set and forget method. You don't want to look at this kind of stuff. You just want to set your TPs and chill. But same kind of scenario, right? So the 382, a little tighter on this one, obviously, but still a good place to take your partials, remove any of that sort of, lack of psychology or risk or any of that kind of stuff out of the trade when you hit the 382. The next one you can potentially take it out, of course, is the 0. But look at this monster trade. Okay, so what are we looking for? What are we always looking for? Right? What happened here? Okay. Break in structure, multiple different spots. I mean, you could draw a line here too, really, but we grab from the very top of the move to where we think the pullback is happening. Okay. Comes back up, gets stuck in our golden zone, wick rejection in the golden zone or above, breakdown in the golden zone or below, and we sell. And look at it go. That is incredible, guys. Look at this. And what are we targeting below? Huh. Look at that fat order block right there. Massive one. Absolutely insane, right? That's what you got to target down below. A lot of these order blocks are institutional positions to move the market in certain ways where they take tons of profits on the way up and then comes back down to tap them so they can close them out. Let's see. It's still going. You got to learn how to swing trade, guys. I know it's hard and I know it takes patience, but it's the best way, the most efficient way, the most consistent way to make money in these markets. You don't got to be risking a ton of money on 5-minute, 15-minute moves. You're going to lose all your hair. Your psychology is going to be totally messed up. You don't want to do that. So here's our position, right? In a 4-hour. That's 427 pips. Find me someone else who's going to tell you how to get 427 pips in a month. Right? And that's just one trade. 16,000 on NASDAQ, right? I mean, so far, the move that we've caught so far is a 6,000 pip move on NASDAQ. 6,400 pips in a month. Find someone else who's doing that. Won't. And if you do, they're going to be charging you tens of thousands of dollars, or they don't teach anyone because they don't want anyone to know that this is like a really, really good, efficient setup. So either way, guys, I hope you liked the video so far. Always, please try and support the channel. You know, like I try to put out videos and put a lot of work in this, and I know these kind of things take a lot of time to grow, but the only way that these channels, any YouTube channel can grow is with your help. So please, please, please consider liking, commenting. If your buddy's like, yo, I'm trying to learn how to trade, I mean, don't show them this first because it takes a little time, but hook them up, man. Like, try and teach these people like what they need to be doing. So that's odd USD. I like odd USD because there's not as many liquidity grabs, right? Whereas you'll see in the more popular pairs. For instance, this one. Okay, here we go. Another setup with a different pair, right? Same one though. Okay, we're still working in the same areas, right? Bet you that this is in that July time, a little earlier, June of 2022. Boom, came down here, and then war, all that good stuff, tanked. Obviously, you can see my lines. Always leave your lines. If you put a line on there for some reason in the past for a key level of price, there's a good chance it's going to react to that again. Here's GBP USD. If you know me well, you know I trade this quite a bit. I don't know why I still do, but I make money off of it, so I do. Here's our little trend, right? Got our little trend line. Structure breaks. Okay. We have the retest. The higher highs are being created. And then what happens up here? Well, would you look at that? Wild, huh? Pushes up. Hits this previous high. Okay. Doesn't really take out any buy-side liquidity here, but it took out a bunch here. Took out a bunch here. We don't need more, right? Hits the 6-1. On the fib, we pulled from the top to the bottom. Wick rejection and the sell. is on. Scalp it down to the 382 or down to the 0. On pairs, I like to try to get it down to the 0, or like the equal lows or equal highs depending on a buy, but this is mainly a shorting sort of setup that I use. For the NASDAQ, the 382, because that's a lot of volume and it's a lot of money moving quick. Wow, you don't say. A whole week of news, it's coming back down. So, wick rejection, candle closes within the golden zone or below. We're in for a short position. We catch it back down to the 0 and catch a total of 250 pips just on that move alone. Okay? Take your profits if you want. That's a great trade. There's not a whole lot of reason for you to have to hold it even further. Or take your 80% and understand that now you're in a scenario in which there's potential for you to become what is called a position trader, a true swing trader, where you're holding positions for 3, 4, 5, 6, 8, 12 months. It's possible. It requires patience, and that is all it requires. So, comes down. Now we're stuck in a little bit back and forth, right? The battle is on between Great Britain and the United States when it comes to their currency. Boom. Sell side liquidity liquidated. See you later, right? Comes down. Comes back up to retest. Strange. I've got a previous price here from before. Seems to keep reacting to that. Chances are it's going to react to that and start to drop. Hits that wick rejection. Ends the week in a bearish candle. Bet you it gaps down, right? We take it on the zoom out mode. Understand there are order blocks all the way down, so we can target them the whole way down. Ladies and gentlemen, that is the fake out breakout, the Sigma setup, the anti-retail setup. Please, I hope you can spend the time to watch this. I know this video is long, but it's important to understand that if you stick to this one strategy and you just look every week at the charts and try to see what price is doing, you can catch 2, 3, 4 trades a month, every month for an entire year, only end up having to take 40, 50 trades a year and make a 6-figure salary. It is possible. I promise you it is possible. Memorize it. Become an expert of it, and then apply it. If you have any questions, you know how to reach me. Feel free to ask. Drop questions in the comments. If you think I'm wrong, tell me I'm an idiot in the comments too. All press is good press, right? This is the thing I use. This is what I use on my funded accounts. This is what I use to pass my funded accounts. Everything, man. This is everything. So, hope you guys enjoy. Today is Sunday, the 12th of March. So, hope you all have a good trading week. Hope you all are still in some of these moves. And on this last one, GBP, I think we're in a situation where we can take another position and sell down. I think we can look at a little bit of buy-ups on NASDAQ too, like I said before, and we're going to be in positions to take sells. Like short, 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 short. Okay? We're in a bearish market, guys. Short.